What's the end game? This is where I think it's kind of cynical. I think the end game is to get people to push the stock higher. The problem is it's more testing the faith of the already faithful and getting some aggressive traders who are just inclined to jump in and hop on situations, rather than some sort of expression of why the company is a bargain at this price.
You're listening to IBKR Podcasts. Find more conversations at IBKRpodcasts.com. The following podcast contains options-related material. Prior to listening to today's podcast, all listeners should read and familiarize themselves with the characteristics and risks of standardized options, or ODD, which may be accessed through the link found in the show's notes or podcast description page. Please remember, any trading discussions are for information purposes only and are not intended to portray recommendations. Please listen to further disclosures at the end of today's episode. Now, welcome to our show.
Welcome to this episode of IBKR Podcast. I'm Andrew Wilkinson. I'm joined today online by my chief strategist, Steve Sosnick. Welcome, Steve. How
Thanks
are
so
you?
much, Andrew. I'm doing great. Thank you.
And I hear it's been me all week long for you, ever since the weekend. Or is that meme? I don't know. You've been inundated with media calls ever since about the impact of Roaring Kitty's position in GameStop, Steve. What different angles are the media interested in covering? Tell us about your journey.
Yeah, it's been pretty much an endless topic of discussion. The only break I got was when the New York Stock Exchange had some bad prints, and I got some calls discussing the impact of those, which is also not exactly my favorite thing to discuss, but so be it. And that turned out to be a fleeting issue. The angles that I think are being discussed with GameStop are, number one, what are they up to here? It's obvious on the superficial sense what they're up to, trying to goose the stock higher. But, what specifically are they trying to achieve? I've got a lot of calls, again, because of my options background, about how were these people able to accumulate 120,000 calls on a line that has an open interest of 145,000, meaning they own over 80% of the calls on that one line. And by the way, one of the things I was looking for today was to see if that open interest declined, meaning that Roaring Kitty would have exercised some of their calls. They didn't, which is understandable why they wouldn't. A lot of people ask about the different strategies of how do they monetize it, which involved gamma hedging. Simplest way would be sell the stock, and whether you sell 100% of the stock or whether you delta hedge it at about 85, 87% of the stock. Either way, if they did that, that would be good, although they purported not to sell stock or sell options yesterday. So another big topic of conversation is this indeed Keith Gill? Is Roaring Kitty who we think Roaring Kitty is? And there are some real questions about how much money they're controlling and the tactics that they're using. For example, Keith Gill was very visible. You could see the picture of him with his headband on and his t-shirt and talking away, and he was very public. And here it's been very, very mysterious as to who's behind it. The theme that I'm really trying to express a lot is the original meme stock craze was very much organic. It was us versus them. And the them were the short sellers, whom they portrayed as nefarious. I don't take that view about the short sellers. Short sellers are literally just trying to sell high, buy low, as opposed to buy low, sell high. But, there was this groundswell of how dare these fat cats bet against all these, our favorite companies of our youth. It was very much millennial driven. It's kind of stocks that millennials would have identified with. So really, you were able to get a lot more traction among a bunch of people who were not necessarily connected in any real world sense, except through social media, in a period of time where we were all disconnected because of COVID, where stimulus checks were coming in, where interest rates were zero. And that created this huge groundswell. Now it's not clear who's the them. And I do suspect that it's a lot more cynical, in the sense that I think that the faithful, or those at least who are inclined to follow the postings, are the ones being used for liquidity purposes rather than, hey, let's rally around the flag, boys.
Let's think about this, Steve. The purported position is 5 million shares and 120,000 call options expiring June 21. Potentially worth, I think, $260 million. If it is Roaring Kitty bragging about this position, is that the best way to say it? Bragging about the position? What impact does he expect to have? That people will literally jump on the bandwagon and do the same thing and help drive it up? I mean, what's the end game here? we can see very clearly now that there are no earnings at GameStop at this point.
Well, that's it. I mean, GameStop earned 5 cents last fiscal year. And that's good because it was the first profit they made in 3 years. So they got that going for them, I guess, which is nice, but it's not a steadily profitable company. In the last 4 years, they basically burned through over $900 million in cash. Now, on the plus side, a couple of weeks ago, they sold $900 million worth of stock, about 933 million to be exact. I will argue that they leaned into the meme stock phenomenon and took advantage of it. My caveat there, of course, being companies don't typically sell stock when they believe that it's undervalued. So take that with a grain of salt. What's the end game? This is where I think it's kind of cynical. I think the end game is to get people to push the stock higher. The problem is it's more testing the faith of the already faithful and getting some aggressive traders who are just inclined to jump in and hop on situations rather than some sort of expression of why the company is a bargain at this price. And again, I will give credit to the original Keith Gill, and I'm going to actually refer to Keith Gill as distinct from Roaring Kitty because it's not clear they're one and the same at this point. He did lay out a fundamental argument for GameStop in the initial phase. I didn't agree with it. I didn't agree with it then, and I don't agree with it now. But part of his fundamental argument, at least, was there was this huge short interest. And if you could get a stock moving, you could create a short squeeze, which creates demand. And again, short squeezes have been around about as long as short selling has been around.
That's potentially the best thing it has on its side.
But you don't have the same degree of short interest that you had before. It's just not the same. And those who are short are not going to be dug in saying, you know what, this stock is going to zero and I'm going to fight this thing. They're going to get out of the way pretty quickly, which is why over time, the half-life of each of these meme stock moves has tended to shrink. Think about the one that we saw, I guess, what is it now, 3 weeks ago, where we had the first leaning in Roaring Kitty meme. And anybody who bought on Monday to Thursday of that week was down by Friday if they were still long. We then have since bounced back, but this is where I believe it's just sort of cynical. Let me leave it at that.
If I've got my maths right here, GameStop's market cap is at 8.5 billion. And with the options position, I reckon Keith Gill potentially owns about 3% of the company. So this is a long way from being anywhere even near 50%. Does the size of the position matter at this point?
No, because the one thing, and I wrote this in the piece yesterday, at some level, it's taking a page from the activist investor playbook. And when activist investors take positions, they don't always do it with something even 5% is considered reportable usually. They typically don't even do it with that. And the example I gave yesterday was Nelson Peltz. Nelson Peltz's Trion Management and vis-a-vis Disney. And he took a 1 point something percent stake. I don't remember the exact number, which is an enormous position considering how huge Disney is, but not really enough to influence things. His reputation was strong enough to get people excited. But the difference there, and I'm going to put in Carl Icahn, insert the name of your favorite activist investor here. They're doing it in stocks that were pretty, you could debate what the right fundamental value is, but I think they go in with a pretty good assurance that what they're paying is about fundamental value. Buying a position that big, it's not like if you buy 1,000 shares of GameStop and you can put in a stop loss order, a trailing stop and get stopped out when the volume is huge. They don't have that opportunity. So it's got to be worth something. And that's where, again, I differ here. So the playbook is about the same. Somebody who is known to get investors excited, takes a position, does it loudly. We saw it today actually on the flip side with Axos Bank and Hindenburg. Hindenburg takes this short position, writes this scathing report. The market is conditioned to move in response to that report. And they score a big paper win on day one. What Roaring Kitty is doing is right out of that playbook. It's not necessarily wrong, but the difference I have here is the only thing that would make this work is other investors coming in and bailing out the position, as it were, as opposed to, let's say, agitating for some change at Disney, where you can talk about cost cutting at ESPN, you can talk about the theme parks, et cetera, but ultimately that's a business that just mints money. It's just a question, is the market rewarding them sufficiently for it, and are they minting enough of it? This is very different and in that situation. And that's where I wrote the piece a couple of weeks ago, which I encourage people to read, is when does momentum investing sort of fall into the greater fool theory, In both cases, you hope somebody's going to pay you more for the stock you buy at some point in the future. In the first case, it's because you have an investment thesis. In NVIDIA, it's the most ultimate momentum stock, but they keep making money. They keep raising estimates. So be it. At some point, every stock hits its limits. They haven't yet. And so by all means, if you're just buying it because it's on an uptrend, that's momentum investing. If you're buying something that you know is basically worthless and you're just hoping that someone else is going to take it out from under you, that's kind of the greater fool theory because you don't necessarily have a reason to be investing in it. And that's scary to me.
Steve, let's change gears a little bit. Earlier in the week, the Wall Street Journal reported that they were thinking about closing down Keith's Gill account because he might be seen to be manipulating the stock. What validity is there to this?
You know, it involves another firm, so I think you and I are really in no position to comment on it. It does tell you that it's a very visible issue. I mean, think of the groundswell. Think of the fact that Keith Gill had to be dragged in front of Congress, or think of the uproar that happened regarding other brokerage firms and other trading firms and the clearinghouse with the margin. So while I think it behooves neither of us to comment specifically on what another firm may or may not do, the fact that this is being discussed in that way tells you how socially or politically sensitive GameStop has become in many quarters. Let me leave it at that.
What do you think the outcome is here? What's the end game?
The end game is, can they keep the music playing long enough to entice enough people in? I'm very sort of skeptical and cynical about what's going on here. The tweet that they posted at the end of the day that showed they hadn't changed their positions, we don't know that they have the positions. We don't know that they still have the positions. There's a lot of mystery here. And ultimately, it really depends on how long can they sustain this thing, because it is at some level trying to sustain a stock at a level that doesn't support fundamental investing. In the case, again, let's say of Disney, Nelson Peltz could get institutions rallying to his side because they could point out the case for how much this stock makes and what its potential is and how much it earns. It's hard to see a lot of institutions other than those who are just trading-oriented institutions, of which there are hedge funds and other accounts like that. It's hard to imagine a pension fund moving heavily into GameStop because of its valuation. So I don't know where that next wave of buying comes from, and that will determine the end game.
Brilliant. Let's leave it there. Steve Sosnick, Chief Market Strategist at Interactive Brokers. Thank you very much for joining us, and you'll stop by.
Will do. Thanks, Andrew. Take care.
And to the audience, don't forget, if you like this podcast, don't forget to subscribe wherever you download your podcast from. Bye for now.
Options involve risk and are not suitable for all investors. For more information, read the Characteristics and Risks of Standardized Options, or ODD, which may be accessed through the link found in the show's notes or podcast description page. The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. The material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, if necessary, seek professional advice.